Kuan Yew's son was coming, he was on a visit to the States and he came to the CME. And he came to a meeting of about 10 board members. And it was nice enough for me to be invited. We had a long discussion. And he laid out that Singapore really saw itself as being the Switzerland of Asia. And we actually had a discussion about it because I said, that's I could see that you want that role, but you just may be too small and won't be able to pull it off. He says, no, we think we can do it, which is why English is such an important part of their education process.
Hey, can you?
He laid it out. I mean, so you bring up Singapore, and Tokyo should have been it by default just because of the massive amounts of money they had, and they still do, place all over the world, right?
That's what I would have thought.
Hey, you guys,
Okay.
Can I put a hold on you for 2 seconds?
Oh, Julian.
All right, let's see. Make Judd the host.
Okay, can you? All right, I'm back. Sorry. All right.
All right, hold on.
All right, so you can see this yen yuan. I mean, this has had a massive quarter last year, ORH quarter, and now it's following through.
I'm sorry, what was that, John?
Well, the quarterly yen yuan had an ORH quarter last quarter, and it's following through. And the low on the chart is the 50 quarter moving average, and the yuan is gaining on the yen and everything else. So I don't think that's a small move that's going to stop.
Well, certainly that could explain, the strength in the Nikkei, over the past couple of months, but, nothing that I would say is extraordinary.
Well, all right. Well, that's, you guys wanted to talk about that spread, and that's what I see.
What I want to talk about is the correlative factors of it, which we're seeing, right?
Right.
Why is it only dollar yen? Because that's all it's reacting to. That's really my point, because you see Euro yen is popping here a little bit. I mean, there are certainly many other relationships that are just as relevant today. So probably, maybe the yen yuan, is relevant as anything. I don't know. I'm good, but that's why.
Well, here's the euro yuan.
Yeah.
On the weekly.
Okay.
Which has got an ORL week, so that's yuan strength, right?
Now I got to expand this again. Hold on, let me see. Oh yeah.
And the daily, I don't know if there's that much more to go.
Well, let's keep China a little bit simple for a moment.
Yeah.
China has had I'm going to call it an economic recovery before anyone else, but they were one of the first ones to go into decline. China started entering decline in the fourth quarter of 18. Okay. All right. So now, now they've turned the corner. So I would expect their currency to get stronger on that alone. To me, it really has more to do with their economic rate of change than interpreting strength in the yuan as something more than it is.
Well, a lot of the analysis in yuan is based upon the Chinese bonds and the yield, on a relative yield. It's amazing how many articles there are over the last 2 days about that.
It's 2.7% versus.
So, you know, yeah, you know, there's an article today, I think in Bloomberg or the FT, talking about Brazil, but Brazil rates are very low. Mexican rates have come down dramatically. Russia, different story. And then somebody put out a piece talking about that the best way to play a Biden victory is long peso and long ruble. I'm not sure I'm going there. I don't see that quite yet in any way, shape, or form.
Did what's his name, Miller, from the China Beige Book? He was on with Tom Keene this morning.
Oh yeah, what do you have to say?
Well, he doesn't think that this recovery in China is really all that much of a recovery.
Yeah, he's not alone, but it's moving markets quite a bit.
Yeah, sure is. And here's the other thing. The Chinese domestic economy, right? You're seeing strength in the Chinese consumer back home, and you know, that's something that we've been keeping our eye on for a long time, is looking for that moment in time when the Chinese economy becomes more self-sufficient, more domestic oriented.
Mm-hmm.
You know, and so, you know, these are things that I'm keeping an eye on.
Yes.
But I'm not convinced of anything yet.
Yeah.
You know, so at the moment, I'm just treating it as nothing more than a rate of change improvement in growth and inflation in China. End of story. Until there's more evidence to come out to suggest it's something more than that.
Yeah.
Or if China suddenly announces that they're going to allow their currency to freely float in exchange.
Yeah, which is not going to happen. But
which is not going to happen anytime soon. No.
But we may find that the Chinese economy is a little bit better. That's why they're letting the currency. I mean, last night was a pretty substantial move for yuan.
Well, don't forget they've been closed for a week. So, you know, you're going to have a little bit more of a movement on day one.
Yeah. Well,
you know,
but that's substantial for that's a pretty heady move for the Chinese, and it may really reflect that there's a shift to a more domestic oriented economy. That's been the Michael Pettis argument for quite a while. So, and that may be the case. Look at grain prices are going up. Yuan is going up. The grain move is sustained now. You know, this is not a hokey move.
Yeah. So the Chinese need to buy food.
Well, we don't. You know, that's what Father and I talked about a little bit. They'll never be caught short food again. Trust me, that ain't happening.
No. The other interesting thing that Miller said, and this makes sense, is that what the Chinese really don't want to see is they don't want to see a big pop in their currency. They'd rather see a slow, steady rise in their currency.
Nobody wants to see a pop. They'd like to see a slow, steady rise. You know what?
But I'll tell you what though, the stronger one, plays right into the hands of the Chinese domestic consumer.
Yes, yeah, that's why they'll allow it and promote it, and they'll be able to screw a lot of speculators at the same time. By the way, nothing like screwing speculators, squeezing their positions, and letting them do the work you want done. That's the other side of the market. That's why you should never prevent short sellers in anything. Don't be afraid of them, because if your policies are good enough to make them wrong, they'll do the work you're trying to do.
And I still think Mitch McConnell's the key person to watch, and it's the game within the game. I was talking to Judd a little while ago, and the way I see it, I think of these things after I step away from my screens and I have a few minutes to think and breathe straight. And the way this is setting up is that, you know, McConnell came out and he said, nothing's going to happen until after the election. So Trump, I believe Trump has a sixth sense about the stock market. And he can, I don't know how he does it, but I think he can sniff out when the stock market is on the verge of taking a dump, right? So what does he do? The game within the game is he comes out this morning or whenever it is that he said, you know what? I told my negotiators, go big, right? He's probably the best president in history at pumping up the stock market with tweets. I mean, he did it all, you know, throughout the last couple of months with the vaccine stuff, right? And the market levitates on this stuff. The only thing that I'm worried about now is that we end up not getting any kind of stimulus until after the election, and somewhere in between here and there, the market says, no mas, and it takes that corrective dump.
Angelo, I hear what you're saying, but I'll tell you why I would disagree with you. Because my experience with markets is when you try to jawbone and bullshit markets stop reacting because they get used to, I don't care who you are. I've watched it in the currency markets. I've watched it in so many markets. And after X plus 3 or 4, you lose your credibility and the market just turns and does what it wants to do. Now, what could make you right is in the zero interest rate environment, which we've never been in before, we don't really know how things act because there is a very powerful force that sustains it, and that's called zero money. That, you know, money, where are you going? So my experience is that when anybody who jawbones markets and tries to shift them without real action, very soon loses the credibility, and the markets will just do what they want to do. So I'm a little skeptical on that one. But
I mean, Ned Davis research. I mean, are we due for a correction? Yeah. Bear market? No. I mean, Ned Davis research just 2 days ago, put out their work, and basically they've come to the conclusion that stocks are just about 100% overvalued or overpriced.
Okay, and now here we go. Here we go. Business Insider just rolls out billionaire bond king Jeff Gundlach warns stocks will crash. Predicts a week.
That's a sensational. That's a sensational headline. Now, yeah, stocks will crash. Correction? What's a crash? 15, 20%? I don't know, 25? That's what we had in the fourth quarter of 18.
He says within 18 months, the markets will crash, the dollar will, So, you know what? Yeah.
I mean, that's not helpful.
Listen, I could make every argument in the world. Here's some. Yesterday, Cuddler was telling us there would definitely be no deal until after the election, right? Or was that Wednesday? So the guy who I love
maybe he did say until after the election. He said something. I'm starting to lose track of all the different things these idiots say.
Right. And now today he's out. Trump has approved revised stimulus package. Larry, somebody better get you in the loop besides Kramer.
Yeah. So Trump better have a conversation with Mitch McConnell, because the policy analyst that I follow last night and this morning said, he talked to people in the Senate on Capitol Hill, and he said there's nothing going on. He said, unless they're lying to me, which they've never done in the past, there's nothing going on.
Let me tell you, they're lying. The stock market tells me that they've been lying. Somebody knows.
Yeah, I mean,
it made perfect sense, because when Trump saw the effects, not that he didn't know it, but you saw it. Then all of a sudden we reversed. So we made a low Tuesday night, and we've been climbing, more than climbing. Yesterday was more than a climb back. That was,
Well, the last 2 days had terrific internal breadth.
Yeah. So,
are we set up for a correction? Yeah. Is it 8%? Is it 12? Is it 15? Is it 10? I don't know. But I'm not suggesting a bear market.
no.
But some sort of an exhale. Let me phrase it that way. Some sort of an exhale where we can, buy them back.
Well, I'll tell you right now, if you're just looking at this technically, all right, the target on the matrix sheet is where I recommend. Well, I'm taking a shot at on the wild side of the down, because I think you can manage that with a real tight stop. And I think if you're a long only portfolio manager, you got to be absolutely insane not to hedge up there. And I
For
think
sure.
And it's,
where's that at? 3508?
yep.
Yes.
So you got 26 on the daily, right? And that is a swing count that Langer came up with the same number that I've had on my sheets. I came up with it a while ago, and that's where you got to give it a go. And I think if you get there Monday, or even in or the first part of next week, that's when you give it a shot. And I don't think you're risking much at all there.
Ira, I thought we had a chance to get there today. Now, when I look at the currencies, Ira, you tell me, because you know them better. I'm no expert in currencies, but it looks like, the dollar, the crosses, they all look like they have a little bit more room to go, which looks like it might match up, not exactly, but it's in the neighborhood of a match with that 3505-ish number.
Yeah, and it's a perfect big count swing. And
Do you see the same thing, Ira? I think he stepped away.
Yeah, well,
Guys, swings aside, do you recall 3 weeks prior to the election period, 4 years ago, 8 years ago, 12 years ago, how did the markets react?
I'm too senile to remember that far back, Robert.
No, I'm serious too. I don't remember, and I'm younger.
2016 was a tough year, Robert, and for 11 weeks prior to the November 16 election, the stocks were down 11 weeks in a row.
That I remember, that they bottomed day before or night of.
No, they bottomed the night limit down.
Yes. What about the 8 years ago?
8 years ago?
Yes. Do you recall?
Clinton?
Well,
The second Obama? Right?
8 years ago, there was no presidential election 8 years ago.
Well,
yeah, it was Obama.
Actually, let me back up, Robert. Which election are you referring to?
Presidential.
Talking about the second Obama.
It was Obama, and Romney.
Oh, okay.
I'm just curious, how do they? I guess over the weekend I'll dig into day by day, week by week myself, because I'm a little curious myself. How much of the elections play into the stock market? So far I've seen yesterday, the only not so surprising statistics was that the indexes put versus call ratios were 219%, highest in 2 months, but okay, that's hedging.
So that would be the summer of 2012.
Yes.
And the early fall of 2012, right?
Yes.
Is that the period?
Yes. And then, of course, we know 2008 was not a regular year.
mean,
Because I'm trying to think, okay, if I'm a Republican, do I want to really, I want some kind of a package because I don't want people complaining that I'm dragging my feet or, there would be a negative perception. If I'm a
we're
Democrat,
already getting that heat, Robert, from the moderate Republicans that
Yeah.
are up for re-election.
and if I'm Democrat, wouldn't I want to torpedo the efforts and say, see, they are dragging their feet. On the surface, they may look like they want the deal and that the other side is slowing them down, but do they really want the real deal if they may not be in the office?
Well, yeah. So if you were a moderate Republican, okay, and you had any balls, you would just tell these guys you're not voting for their Supreme Court nominee unless you get a relief package for your constituents.
That makes total sense to me.
You know, if you had balls, but they're all squirreled away. I mean, they've all lost their manhood.
Yeah, well, you know what? You're not going to get one or two guys to do that. The only way that would work is if a bunch of them got together because there's safety in numbers. So
Yeah,
I don't
yeah,
know how many
that's
they
right.
need. 10 of them, 15 of them.
Well, they only need one. They only need one or two to say, hey, we're not voting for her unless you give us this, and they can't run it through.
Yeah, but I don't know if one guy's going to stick his neck out like that because then he looks like a pariah.
Well, yeah, but if you aren't going to get reelected, what the hell's the difference?
But they're not going to. None of them are sitting there saying I'm not getting reelected. They're not going to sound defeat until after the fat lady sings. But if 10 or 15 of them got together and said that, yeah, that'd be a whole nother. That'd be a horse of a different color.
All right, I'm gonna